Hey guys, Akil Stokes here. Welcome back to another video. We're going to be short and sweet this week because the family is still sick and I'm on mom duty. But we're coming off a heater last week, one of my best trading weeks of the year. If you guys watched last week's video or the last couple of weeks, we've been spot on with all of our predictions. I don't know if it's going to happen again. I don't really care, but we're going to come in once again, predict what we think the market is going to do next, wait for opportunities to provide themselves, and then if we get our entry signals, take advantage of them. I'm going to start here with the Euro Yen. This is actually a trade I entered on Friday and looking at a short here. Now, a few things here on the daily chart. You can see we've come into a previous level of structure resistance. We've retested the highs here up at 144.25. So we put in a nice hold to end the week. Now, really where the signal starts to get a little bit nicer is when we go down to the lower time frame. So if we pop down to the 4-hour time frame, you're going to see this, right? We have price action coming up. Let me get my little tool here going. We have price action coming up, holding our level of resistance, spiking back down. Now, when we spike down, we have some very nice rejection wicks right here, right? This is a very good signal for bullish continuation, right? The bears tried to push down, the bulls said no, and we ended up going a little bit to the upside. Now, we didn't see a follow through. Again, we're fighting off that higher level of resistance. So location matters, location matters, location matters. But why this is important, because as we came back down, the bears were finally able to break beyond this level, right? And if you're new to understanding structure, right? Structure is what we use, or is another form of saying support and resistance. Once a previous level of support is violated, we look for it to act as resistance. Once a previous level of resistance is violated, we look for it to act as support. So this, in my opinion, was a strong level of support that formed. It was violated, and now the expectation is that it becomes a strong level of resistance. So as we head into our week, looking for shorts here on the Euro Yen. Again, I'm already in shorts, which doesn't mean you should get involved, right? This is not a signal service. Don't just do stuff because I do it. You'll go broke rather quickly. But if you get an entry reason for a pullback trade, this can be kind of a first strike entry. And what I mean by this could be an entry in a bearish direction before you technically have a bearish trend. So next up is going to be the pound Aussie. We are on advanced pattern alert here on the pound Aussie. If you guys are new, advanced pattern formations are harmonic and Fibonacci based patterns where we have multiple legs or multiple moves in the market. And when they hit specific Fibonacci levels in a very specific order, they create some pretty good trading opportunities. Most of the frequency in my trading come from pattern formations. They're kind of the slow and steady kind of underlying thing that has been occurring in my trading for the last, 16 years. And then every once in a while, I'll go for some bigger home run trades with the pullback stuff or the trend continuation stuff. So we're looking at something like this, right? This first move, swing low to swing high, is going to be our X to A. This first retracement coming down to our 50% retracement is going to be our A to B. Our next failed extension right here, right? Price tried to continue up and got rejected, is going to be our B to C. And then our CD completion actually came down at our 886 Fibonacci retracement, right? So if I take a little bit of a rectangle tool here, this is the completion or the start of our pattern completion, and then the X leg is the end. So we're looking for a buying signal anywhere within this level. And I say buying signal because you can do this a handful of ways, right? Me personally, I'm very aggressive with advanced patterns, right? They're so powerful that I don't need any extra confluence. I just put an entry order on the D completion and let it go on its way. But you can also look for alternative ways to enter. You can look for confluence and indicators or oscillators. You can look for smaller, simpler pattern formations within to be your entry, whatever you want to do with it. I bring that up because if we go down to the hourly, you're going to see that we're looking to form a double bottom at this level as well. So if you're someone that is looking for confluence and you don't want to be aggressive, you now have a potential retest of structure depending on how we open. And this could be your entry reason for a buy back up to essentially that 50% level, that 170 even handle. That'd be my guess. Let me just measure this out real quick. Yeah, a little bit below at 169.86. So nice buying opportunity here on the pound Aussie. Next up is going to be the euro pound, right? I rarely look at this pair because everything takes so long to occur here, but we do have an interesting opportunity that intrigues me here. And just like the euro yen, it starts with a retest of structure, right? Look left, structure leaves clues. You can see price action has come up into a previous level of structure resistance, and so far we put in a nice little hold. Looks like we could be starting a head and shoulders as well, but that'll be something to visit for a future video. What I like about this is kind of the base that we're retesting, right? So if we look at the 4 hour here, just like the euro yen, we're gonna have some clues in the form of these rejection wicks right here. Again, this tells us that there was buying interest, right? If there wasn't buying interest, the bears would have been able to push it down. So what intrigues me about this is we're now retesting this just like we did with the euro yen. If we can break this level, violate this level, excuse me, and this is going to be called a decision point, meaning, you know, we're not trying to do anything at this specific moment, but we're going to let the market make its decision, show us what it's more likely to do, and then once it shows us that, we want to pounce. And that's one of the biggest differences between, I think one of the biggest struggles that a lot of new traders have is the difference between a prediction and an actual trading opportunity. A lot of new traders, they make a prediction, they'll say, hey, this could be a potential short, and then they get short right away before waiting for any proof. Professional traders or successful traders, consistently profitable traders, whatever you want to call it, right? Traders that are consistently making money in the market, right? They're a little bit more patient. They have this theory, they have this prediction, but they wait a little bit extra for the market to really tell them what to do or what's likely to happen before they do it. You know, I was watching this, I'm big into like sniper movies and stuff like that, and I was watching this sniper movie the other day, and there's a difference between the sniper that's a little bit more patient, going for kind of the one shot, one kill, waiting, you know, he's willing to sit there a little bit longer for his target to be in the perfect location before pulling the trigger, versus the sniper that gets a little bit excited and rushes, and then they miss the shot, then they blow the trading opportunity, or they get hit themselves by another sniper. Not the greatest example, but hopefully that makes sense. But anyway, we're waiting for a violation of this level. If we can take out these lows, right, there should be room to the downside, right? A good level to look for if you're a conservative, again, is going to be right here, right at this little shelf level, about 86.16s. And of course, we can look a little bit lower than that as well at 85.72s. Now, again, something that we can keep in the back of our mind is that this can also turn into a head and shoulders, right? Head and shoulders patterns are classic chart patterns, right? I consider myself a classical chartist, right? And they are reversal patterns. So they occur at the end of a directional move. So you can see that price action was in a bullish trend. If you remember our higher time frame, we then retraced. We then got a smaller extension, which is a sign of a trend slowing down. That smaller extension also came to a previous level of structure. If we are indeed going to have a reversal here, right, we would expect a somewhat symmetrical move, right, and an equal retest to what would be our neckline, or what would form our neckline, before getting a shoulder that comes up here. Again, ideally it's symmetrical, but you never know in real life, and then eventually dumping down. So we may revisit this in a few weeks as well as this plays out. So keep an eye on the euro pound for a short heading into this week, but also keep an eye out for a larger, longer term head and shoulders pattern. So lots of pound pairs this week. Pound New Zealand is next, and this is going to be a little bit of a combination between what we saw on the pound Aussie and what we saw on the euro pound. So first and foremost, right, we've got a nice little pullback trade coming in here, right? So again, we've got these wicks right here. Those wicks were violated, right? Lower low, lower close. Price has pushed back up to a previous rejection zone right here, the wick of this candle. And so far, we've put in a little bit of a hold. So a nice little pullback trading opportunity here, where the market does that, it does that, it does that, it does this. And we can project that price is likely to continue lower. Now, if we are going to continue lower, right, the next part of the equation, this is another common mistake that rookie traders make, is they're good at predicting what direction the market is likely to go in, but they're horrible. They don't take the time to really work on the skill of predicting where it's likely to go to. And I think that's part of the get rich quickness, there we go, for the blooper reel, that a lot of people do in the market, right? What do we hear online? Perfect entry, you know, sniper entry, blah, 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 right? Well, the entry is important, yes, because we want to get into the trade. The timing is important because we have to get into the trade before it moves. But what's also important is the exit, right? And that goes for your stop loss location, and that goes for your target location as well. And in fact, if you guys get a chance, if you haven't been following around, right, I live streamed my live trading room Tuesday, Wednesdays, and Thursdays. Not as much this week because, again, my wife was sick, so we had to call out. But I believe this Wednesday, I did a video called Stop Losses, where we're talking about a trader that I work with on the Tier 1 trading platform sent me his trading plan. He was asking me to review it, and that way he can get back to work and make the proper adjustments, and we can get him on track to having a solid trading plan. And one of the comments that I had on there was about stop losses and how to be better essentially at placing a stop loss. And we ended up carrying over that discussion to the live trading room on Wednesday, and it's up on YouTube for you to view. I think it's called Stop Losses. At least the thumbnail says Stop Losses. I'm sure in post editing I'll throw it up. But if you have questions about stop losses and how to place stop losses and the methodology behind stop losses, make sure you check that out. I would also highly recommend checking out the Trader Coffee Break show we did directly after that live room, because that was the topic for the Trader Coffee Break as well, on a little bit of a wider range, not just stop losses, but the importance of having a methodology in trading in the first place, meaning knowing why you're doing stuff instead of just doing stuff. It's massive. So if you're serious about your trading, make sure you watch both of them. I'll put links below. But the question is, if we go lower, right, where are we likely to go to? Well, again, we bring on our fibs again, swing low to swing high. This should look familiar. This is going to be another advanced pattern formation, another bat pattern. X to A to B, B to C, C to D down here, right? So that kill zone for the potential bullish bat pattern should also be the exit zone if you're taking a short. And then, of course, you can do a stop and reverse if you're someone that trades both, meaning that you're selling it, you exit your sell position with some buys, you buy a little bit extra, and you go directly from a short position to a long position and see if you can get a back-to-back trade in the market. This doesn't happen too often, but when it does, man, it feels good. See you next week.